Hi there, my name is Megan Freed. I'm joined by Freed Marcroft attorneys Brandy Thomas and Seth Conant. Welcome and thank you both for being here with me. We are talking today about things that divorced and divorcing small business owners and their spouses need to know about the Coronavirus CARES Act and its impact on divorce. There are a lot of things that are going on right now, and all of the rules and regulations haven't yet been written. What we want to really make sure that we're reassuring our clients about is that we're committed to be thinking ahead of what's happening so that we can make a plan so that what will impact you down the road, we're already thinking about now. So we're going to be talking very specifically about the snapshot of where we think the various loan packages and tax deferral programs that are available, how those might impact small business owners who are in the process of a divorce or their spouses who are in the process of divorce, and get started on explaining how we're going to make a plan to weave this in so that we make sure that everyone is financially taken care of. That's really the point right now. With what's happening is so just unprecedented that there are all of these programs available that are really important. They're important to the economy, but they're also important to the economy of the families that we're serving. So we want to make sure that we're helping clients get access to the programs that are helping their businesses remain financially stable so that our families remain financially stable as well. I'm going to explain some of the examples of programs that may have an impact on divorce. A lot of the small business owners may be familiar with these, but the spouses of small business owners may be less aware of the current programs that have been rolled out. So some of them involved the ability of employers to defer certain payments, such as the payment of payroll taxes or to defer the payment of health insurance payments. Note that I'm not saying that those things are forgiven, that there's a few months right now that's being deferred of when that obligation comes due. There are also loans available. And one of the things that we're going to be talking about, and Brandy and Seth are going to flag as we weave through some of the strategies here, is that some of the loans that are available to people have a balloon payment in 12 to 18 months that's going to come due. So it's a relatively not very long period of time. It's designed to get businesses through the COVID business shutdowns and the impact on the economy, in the hope that businesses are going to be back up and running and people are going to be back up and working in much shorter than the 12 or 18 months that the loans are going to come due. But be thinking of things like in Connecticut, we have the Department of Economic Development, DECD bridge loan. That's a loan of up to $75,000 that is payable in 12 months from the time it's approved, or maybe I think there's an available extension to 18 months. There's also the Small Business Association. This is a federal loan, the EIDL loan, the Emergency Disaster Loan. And then there's the Payroll Protection Act that has, or Payroll Protection Loan Program that has actually the option of being converted from a loan into a grant. So that one would be very different if it's used to pay a company's payroll expenses. But very specific things need to be done in order for it to be a grant. So you're going to want to think of that as a loan that may be a grant rather than just a grant, because so many things have to come into play. Again, it's wonderful that these programs are available, but we just want to make sure that as we're doing our due diligence as divorce professional lawyers, we are making sure that these factors are built into the plan as we're moving things forward. Brandy, would you take over and talk about how the funding options that are coming online impact people's repayment options and how that segues into the divorce process itself?
Sure. So what Megan had said, which I really want to highlight, is that many of these programs are deferrals. This is not, essentially free money. This is something that has to be addressed between 12 to 18 months from now. So right now, all of our business
taxes in 2 months, or the rent in, really short term. We're talking July.
Exactly. And that's a very good point. Right now, so many of our business owner clients and potential clients are thinking about, how can I access these funds right now? Understandably so. I mean, it's very important to keep these businesses afloat, so you can keep your family afloat. But what is falling off of a lot of people's radar is, how does this work in the long run? And frankly, the rules are changing quite a bit. We don't know, and I don't even think some of the program administrators know how this will work. So that certainly makes things tough. So in a divorce context, certainly we'd want to, do our due diligence, and that could mean bringing in a tax or financial advisor, some sort of planning professional to help us make sense of some of these various options. But there are certain things that we can be mindful of in the short term, and we really want to plan for what happens in July when some tax installments are due, what happens in 12 to 18 months when these balloon payments are due. Again, the repayment term on many of these options, it's very small. So we want to be sure that there is a plan in place. If you've got a child support or an alimony payment that's fairly consistent, how can we guarantee you'll be able to make good on your support payments and also on these expensive balloon payments that you're going to have to come up with between July and even as far out as next spring. Certainly we can think of our clients who are landlords. In Connecticut today, the governor has suspended rent payments for the next 2 months, and also prohibited landlords from evicting non-paying tenants in the short-term period. So there's a 60-day deferral on many of these programs, but that doesn't help our landlord clients who need the monthly rental income to stay afloat. So
and again, it's deferrals, right? So it needs to be, the rent's still due. It's just got a different due date. But for the business owner paying that rent, you still have to be able to pay April, May, and June in July, right? And for the landowner who's going through a divorce, or the spouse of a landowner that there's significant income from rental properties, that creates a gap in income flow over the course of the months that are subject to the automatic deferral.
Absolutely. So if this is something that, again, if you're one of our clients or a potential client, we want to know whether you're participating in these programs. And we're going to, like I said, if we can figure it out on our own, fantastic. If not, if we've got to get some other professionals in to help us come up with a plan, now is the time to start planning. It is not, we certainly will not advise you to wait until June 30th to come up with a plan for your July tax installment. Again, many of these are deferrals, and there has to be a plan in place to make sure that your business is staying structurally sound and that your family unit is going to stay structurally sound when it comes to your financials and what support you need coming in and out. We heavily talk about budgeting in a regular situation. How do we keep the family unit afloat while we're in this transition period? And now more than ever, this is important and something that we really need to plan out, not just the regular budget, but now budgeting in these deferral payments, again, not knowing whether they're going to turn into grants or not, and making sure that you're able to keep that business going.
So we've really been spending some time talking about cash flow. And thank you, Brandy, for guiding us through that. I think that the other thing that we want to explain to you, that's something that we're working on with our current clients who are business owners or the spouses of business owners, is how what's happening and these available programs that people are starting to take advantage of, how they impact the valuation of assets. And I'd ask Seth, can you take us through that a little bit?
Sure. Well, I think Brandy's points are well made, and Megan, what you said about them being deferrals is important, because this is changing the nature of how we might value a business asset, changes the nature of what the debt structure might look like, or the equity position that an owner might have, or the debt to equity ratio, and whatever their enterprise might be. And it's an added layer of consideration where we didn't usually have, based on kind of the emergent nature of the situation. I think the most important takeaway, and what our clients really need to know is, just as much as our small business owners and the spouses of small business owners are really probably overwhelmed with some of the anxiety and the confusion that surrounds these things, we are really dialed into making sure that we keep track of the additional variables that these programs create. And we're also very committed to standing with those clients to make sure that as they're making decisions about whatever relief programs may be necessary to maintain the business, that we're clear how that affects maybe a bottom line or a valuation question, or whether it's just it can make whether the company can continue to operate successfully based on the decisions that are being made. So the last thing I'd want to do for a small business owner is add another layer of concern or confusion. And I think the point that we really need to make is that, yes, these new programs may have an impact on how we treat and value assets that may be part of this process. But it is our role, and we are keenly focused on making sure that all of those things are taken into account, both if decisions have been made, but also, like Brandy says, in an effort to provide a resource to our clients to help shepherd them through some of those decisions, with the added context of the fact that their small business may be facing these challenges in the context of a pending divorce action. So I think it's really important to know that, like Randy said, we have a comprehensive and really competent network of professionals that can deal with valuation questions, that can deal with tax consequence questions, with planning questions, both in terms of personal planning as well as business planning. So yes, there's a lot in flux, but we're really invested in making sure that we can help provide as much clarity as possible every step of the way, both for the client in terms of an operational perspective, but also in terms of how it may have an impact on some of the decisions that folks need to make when it comes to valuing businesses, valuing an enterprise, or coming up with a fair way to divide and dissolve those assets.
Thank you so much. Well, thank you, Brandy. Thank you, Seth. The three of us and the rest of the Freed Marcroft legal team are here to answer any questions, whether it's on what impact these programs may have on your divorce or anything else. Please reach out and contact us. It would be our pleasure to help you. In the meantime, stay safe and take care. Thank you for joining us.